Peter Eliades with you. Stock Market Cycles update for the week ending March 27th, being recorded on Sunday afternoon around 3:26 p.m. Pacific time. That's when this recording is beginning. It will probably be online within the next 20 to 30 minutes. So let's do a quick review here. This is a projection that was given, nominal 20-day projection given to the upside. We gave it to you a couple of days ago, calling for 26.99.42 to 28.65.50. This is on a closing basis for the S&P cash. So what we did at that time was we took this projection, moved it forward to the next longer offset, which would have been this one right here, and placed it on the chart. So now remember, we did this on this day right here. This was Thursday of last week. That's the last time we did an update. We theorized that what might happen, because we didn't think we'd get to that projection right away. If we did that, if we got to this projection area on Friday, then there would have been a real possibility of crossing above these offset lines around here, and that would have been significantly higher projections. If you started with a low close, 2237.40, and you crossed around the 2900 level, talking about 700 points, you're almost back to the area of the old highs again. I don't think that was about to happen, and I expressed that at the time. What I did say was a real possibility was to come down for a day or two, cross these offsets around the same level that would give you a projection into this same area. And indeed, look what happened Friday. We got this decline. Now, we could turn up from here, and if we did and went through this offset here, the projection might be a little bit higher, but it's not going to cross above them at this level, which would have given us very significantly higher projections. So that makes this interesting. So far, the scenario we suggested, and there was no reason to suggest that scenario except for experience with projections and where we think we are in the overall market, to think that first we would get a decline. Now, here's where the fun comes in. The futures are trading already tonight. Why don't we put the S&P future on this chart, and you can see it even a little bit further in terms of what's going on. Look at this, down again. The S&P future is currently about 35 points down. So if this were to continue coming into the close tomorrow, Monday, then the cross would be around here somewhere, and that would be about 2 3/4 squares. So 2 3/4 squares up to around 27.87 or so, which is, I believe, in the projection window that we gave. 27.95 or 96 is where the original projection is. So things are coming together here in terms of getting some consistency of what we're looking for. So let's take a look at, we set up a few charts on the intraday projections, the bar projections, with the @ES symbol, which is the futures, which are trading tonight, but they'll be assigned tomorrow's bar for the full price. In other words, they'll have tonight's pricing on it, and we'll go into tomorrow's bars too and see the pricing there. So let's take a look at what we're looking at there. Look what's happened here. So this is so far today. It's dated March 30th, and that will be, of course, tomorrow's bar for the full day. But just about as we suggested, here is the projection. Anyway, you can see it's in the area of 27.97 to 28.43 or so. But look what's happening. Just as we suggested last week, a nice little decline. And now, if we turn up from here, we're going to cross these lines and give just about the same projection. And if that happens, let's say we get a projection to around this area of 28, let's go to the high side of the projection, 28.35. And let's say that happens in the next day or two. Remember that number, 28.35, and go out to the next longer offset. Watch this. So let's show you where 28.35 is. 28.35 is right around this level. So we can get all the way up here. And that's what? 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 2 weeks. So there's plenty of room to get up there and not give higher projections. And right now, as I look at things, I'd say that's the most likely probability, that we come down maybe even through tomorrow, maybe even another day, end up getting an upside projection that ends up being very similar to the upside projection that we have outstanding already, okay? So as I'm looking at things now, putting them together with what the projections are showing us, that's what I'm looking at for possibilities. The other possibility is that we've seen a top already, and if that's the case, then what you look for is an invalidation of this upside projection. The way to do that was you would have to come below these offset lines here, the 7 to 8 trading day offsets, and initially in the next day or two, they're all the way down to 23.75 or 80, and in the day or two after that next week, you'll have to go back towards the old lows again in order to invalidate. So that's the less likely outcome right now. Okay, let's look at some weekly, seeing as we ended the week on Friday. Let's take a look at some weekly projections because there are a few things I want to show you. This is the S&P with its weekly projections. Now, this is a potentially important point, and I want to show you that virtually all the projections on the weekly projection charts have been met by the S&P cash. This is the nominal 40-week projection. As you can see, this projection has been easily met and surpassed to the downside. The next longer one is nominal 78 to 80-week projection. Look where that is, right here. The low side of that was not reached, which is around, it looks like 21.47 or so. So you could go down lower in terms of the maximum downside for the nominal 78 to 80 weeks. And then the longest projections of all, which are the nominal 4-year projections given by 100-week to 110-week offsets, they have been met on a minimal basis. What does that mean? Well, these projection charts alone are telling us that we could have seen a bottom. Do I think that's likely? No, I don't think it's likely. I think it's a lot more likely we go to the far end of these projections on the nominal 4-year projection chart. And here's the thing. If we get down to the lower part of the nominal 4-year projection, there is a risk of generating a nominal 8 to 8.5 year projection. And if I sound a little confused now, it's not a confusion. It's something exciting that I discovered over the last week or two. In all these years of projection work, and I've been doing it for 30 or 40 years now, the longest practical offset we would use for nominal offset projections for Hurst work was 100 to 110 weeks. That's approximately 2 years. 52 times 2 is 104. So for 100 to 110 week offset, a 2-year offset, you get nominal 4-year projections. There hasn't been a need, generally speaking, to look at longer offsets. But what I did, because we reached these projections so quickly, as I said, I haven't had too much experience, but let's go out to doubling that offset of 100 to 110 weeks and double it to 200 to 220 weeks for nominal 8 to 8.5 year cycle projections. I did that and looked back historically on the chart and watch this. This is amazing. I'm going to go back with you on the chart. Okay, here's the 2000 to 2007 decline. There's October of 2007 right here. Now, the nominal 4-year projection that was given at the time called for 901.80 to 978.44. We went down there, but then we went below there. And at the time, I didn't pay too much attention to that because, very frankly, I wasn't using this fabulous projection software as it's been written now as often as I should have. And I didn't have this whole thing mapped out for me like it is now with the great talent of Stefan Sherman, who's our programmer for this offset software, the projection software. But look at this. This projection down here was given by these offsets, which are, let me click on them so I can confirm them for you and show what they are. Edit moving average, 200 weeks, okay? So that's a 200-week offset. And this one is 220 weeks. So instead of 100 to 110, we double that and go 200 to 220. So that's what these have been offset. And the projection that they give is a nominal 8-year projection. So look at that, and then, wow, look at this. Let's move back a little bit further. So here's a nominal 4-year upside projection, and that comes very close to getting you up to where you got to. We exceeded it by a little bit, but look at the nominal 8 to 8.5 year projection. 1527 to 1704, the final high was 1576.09. So it gave us this projection too, to the upside. Okay, so as you can see on the S&P cash, if you want to be bullish, you can argue that all downside projections have been met on a minimal basis. And that's an important phrase, on a minimal basis. The maximum downsides have not been met. And if they are, this is the scary part for the market. If they are met on the downside, as they could be here, then they will be crossing these offsets right here. And these offsets are right around the 2000 level averaged off. So if you get a high that occurred at 33.94, let's round it off to 3,400, down to 2,000 and cross below here to get that kind of projection. You're talking about 1,400 points, 1,400 points below the 2,000 level. That takes you back to the 2009 low, maybe a little lower, around the 600 level. So that's what we're looking at in terms of potential here. Now, one final thing we're going to show you. Remember the longer-term projections for the Nasdaq 100. Okay. This is important. We've shown you that you could make an argument that the S&P cash has met all downside projections. Here's where that argument faces resistance from some other indexes. This is the Nasdaq 100. Let's take a look at this offset line here. This offset is 20 weeks for a nominal 40-week projection. Now, on the Nasdaq 100, it's come nowhere close to meeting this downside projection, which calls for 56.29 rounded off to 61.32 rounded off. So this projection has not been met. Could it be invalidated? Well, that's what you'd hope for if you're a bull, that this projection gets invalidated. We're quite a ways away from being able to do that now. You've got to come all the way up here for a median or a mid price of the week. And because you're starting down here, that would imply a move really getting back close to the old highs again. Let's look at the next longer offset. This one is confirmed also. Now, we closed right up here. So if we get a continuing rally this week that brings us above these offset lines, this downside projection will be invalidated. But look where this one is. Look how low this one is. We're talking about 47.93 to 56.92. That's way, way down, further additional risk on the downside. And this projection has been confirmed. Here's the weekly chart. This is where we closed. In fact, it was confirmed a week ago Friday. We got a little bit of a rally last week, but we're still very much below these offsets, and this projection is still very much in effect. So that's where we stand going into next week. What should we be looking for next week? Well, we'll initially look for that pattern that I showed you, that we could very well go to slightly higher prices, coming down and then getting above the offset line we showed you to give similar projections to ones that we already have. So that's one thing to be looking for. If we turn around immediately and begin to invalidate those upside projections, then it's a different ballgame, and we start to look for these projections to be met pretty quickly. I don't think that's going to happen. I think the more likely scenario is a further rally, but we're aware and looking out for all the possibilities. The most important thing of all to realize is that the projections will be there, and you won't fool them. You may trick them by giving a wrong projection for a while, but the great thing about the projections, as we've told you before, is you don't sit around like a dummy and say, no, I know they're going to be met. They're either going to be met or invalidated, but when they get invalidated, you no longer look around for them to be met. They could be reestablished again, but you're not in the cold for long with these projections. They're either going to be met or invalidated. And we have some big downsides now on the Nasdaq, and they belie the fact that an argument could be made that the S&P has seen some kind of potentially important low. So those are the things we're going to be looking at next week. Hope you've enjoyed this update. It's been a longer one than usual, but it's the weekend. We have more time. You'll have all day Sunday to be looking at it. Thanks a lot for watching. If you have not subscribed yet, do so. Give us some favorable commentary if you would. Hopefully we've been helpful to you with these updates we've done completely free of charge now for, I don't know, almost 6 or 7 months now. Thanks a lot for watching. Subscribe. Click on the bell. You'll be notified of all the updates that we do as soon as they go online. Have a great remainder of your weekend.